All right, good evening, guys. Ken at Tortoise Capital. This is small group coaching for July 9th, 2024, cohort 2. Let's see. Nothing new to report here, just kind of gearing up for a new crew of students coming in. And we start teaching them in August, but we're lining up all the courses and starting to raise the anxiety level. The international officers are coming in. Got a kid from Ukraine at my soccer camp his dad's in the Ukrainian army, so he's a nice kid. Glad he's out of that country. Sort of brings it home to roost, the seriousness of the world situation. Scratching my head at politics, wondering what in the world brings us to this condition when these are our two choices. Hard to believe. Anyway, what you guys got?
Well, I'm getting ready to hit the road, so not sure whether I'll be in the woods next Tuesday or at a cheap hotel on the side of the road somewhere. So there's a chance I won't be with you guys. This is going to end up being a 4 or 5 week road trip. The highlight of which will be a couple of oceanfront homes in Oregon, where I'll be connecting with my son and his family and doing some surfing and hiking and a few other things. So he launched about 3 weeks ago and is currently in Montana, and just sent me a picture 5 minutes ago of his 18-month standing in a glacial lake in Glacier Park. So things are going well from that perspective. And for me, it's a matter of getting all my gear together so that I can camp effectively in whatever weather. And I always think about trading analogies when I'm camping and hiking. So it's good stuff for that to put things into perspective. I did watch your the replay of the Sunday coaching cohort. And by the way, my neighbors are having their Tuesday night drinking party outside my window. So if you hear F-bombs or other things, it's not me and my family. And I don't know why they're extra rowdy tonight. So something's going on out there. But I thought that was an excellent overview, and I've done some grabbing of artifacts. Hamad's stuff from a couple weeks ago has been very good, and then there's a couple of things, artifacts that you did, Ken, that I really appreciated, and I wanted to bring up a screen here, but it seems like it has disappeared temporarily. Hang on, bear with me.
Should work.
Here we go. All right, I'm getting there. All right, I'm going to try one more time here to share screen. For some reason, my snag. Here we go. Okay, so you mentioned three-day bar and 9-day bar systems a couple of times, and one was on sort of this drawing that you did where you had your allocations of capital, 20% in the BMR, 20% in the 3-day, 9-day, and then swing and day trading. And the 3-day, 9-day, is there a particular page in the weekend report that focuses on that?
Nope. It's just I have that 30 to 50 symbol set of things that I was doing the 30-minute swing trading on, that standard stack. And I look at all of those every weekend and look at them on every 3-day and 9 days as part of the just routine. And I'm looking for standard patterns. I post on the weekend what the SPY market looks like on that, but I'm using the same kind of setup for the for all those 30-ish symbols that I kind of specialize in.
Okay, and so this is from last weekend, and I see this dip
Yep. Yep.
in early May represents that 2 bar drop on the 9. But would you speak to these
Yep.
two charts briefly?
Oh, sure. Well, if I'm just looking for standard patterns, I just start with a description of what I see, right? Let me find my you.
I
Trying to
mean, it
find my
basically
trying to
ends up
find my
being
annotation
a
on here.
3 month and a 6 month look back, I guess, is kind of.
Yeah, I'm looking for my annotation button on this thing. For some reason I can't. Oh, there it is. Okay. Joe screen. Annotate. Yeah. All right. So if I'm looking at the 3-day, I notice that's a P1 just going from left to right. That's a RL10 crossing the RL30 outside of the, it's probably outside the river. And that sets up this as a price level that's important. I notice the R10 comes through the PSAR dot there. That's why it flips to here. So now I know the size of the PSAR flip box is about that big, which however big that is right there, it's probably about $4 or $5. I can't read the numbers on there. And then I notice you get a 1, 2, 3 entry short. If you're looking to short that thing, that's your 1, 2, 3 entry and price hitting the PSAR. This is where it hits the PSAR -1 right here. So either of those two could take advantage of that short. And then you have a 1, 2, 3 rising lows. So that's a 1, 2, 3 entry, and you would put your stop, down around a 3-bar low, the initial stop. That's the earliest I can get in. And then I notice it's holding right at the Bollinger Band mean, which is rising and never look back. I notice the next PSAR flip is over here. So there's the size of your PSAR flip box. Here's where the R10 crosses the dragon. So to me, the PSAR -1 entry is right about in there. And you get nothing but the next leg up. And then when it cuts above this price level right here, that's an emerging dragon. And the stop for that is either the bottom of the dragon or the PSAR flip box. So you can get, that would be your risk box on an emerging dragon. And that's now about probably +1. And both of these little R10 wiggles, the R10 never went negative, and so the little bit of a pullback here in both of those barely moved the needle. So this is on a 3-day basis. This is really a favorable chart pattern. It's above the previous peak of the RL10. You could even count that as a previous peak. And to me, the stops, regardless of where your entry is, I would think skin of the dragon, spine, lower skin, PSAR. One of those 4 stops is appropriate based on the 3-day. So what I'd want to do is mark those up on the 3-day, drill down and take a look at it on the daily or the 30-minute to see where those price levels appear on those charts, and then see if that resonates with any of the patterns on those time frames. When you look at this, this little dip right here, I think is that dip. Or no, I'm sorry, is this dip on the 9-day. Could be wrong. Let's see. May, this is just
Yeah,
before May.
that's the end of March, beginning of
Yeah,
April, and
yeah,
same thing here. So
yeah.
it's
So
the
not sure
bigger
what
dip on the three is the one to
is
the
this
right
one?
there.
Is
Yeah,
this one? Yeah. So this one, this little dip is probably here. This dip is right here. And we don't even see that dip on this chart because it's probably further to the left.
right.
So you can be sure that that 9-day on the 9-day bar, that dip, that was a significant looking retracement on the daily chart. That one is really significant. Um, so I mean that's the process that I look at as I'm getting read on to the charts. I noticed that when I'm looking at the MACD, there's it went into the harsh winter around here and then reversed into spring, and now it's coming up into the Red River, and now it's comfortably rising, and that's what this feels like. So this is just a healthy, this is a healthy bear market with professionals being nervous about hitting that's all-time highs right there. So that of course makes everybody nervous because there's nothing to compare it to. How far can it go if there's no overhead resistance? Exactly. Don't know. So I would, following the same procedure on the 9-day. I'm looking at the same kind. I'm looking for where the PSAR flips are. I'm looking for the peaks and valleys of the RL10. Those look like important. Like this one looks like a leg to me to stabilize. That's where the R10 peaked. And as soon as that breaks above, that's a COTA 2 on the 9-day right in here. It never even tested the PSAR dots, and that's this one gives you a pretty clear COTA 2 reentry right even here. Once you get on the north side of the dragon, that's a pretty clear signal on 3-day with a stop right here.
Yeah, so
So
you mentioned also that like with the BMR system, if you get a 15% gain in one of your positions, you tighten your stop up from
yeah, I mean, I would take a
10% to
look at that one
5%.
instead of just on the monthly, on the blended month rebalancing. I'm not even looking at charts theoretically because the numbers on the spreadsheet tell you to buy it, whatever it is on the next morning's open, and you've got a 10% trailing stop. And now the thing goes up 15%. That turns out to be a statistically significant number over the long term. So when it hits that level, I'll just come down and look at the 3-day and the 9-day and see, is there some price level that makes a technical stop that makes more sense than just a 10% trail? Because if it was SPY that we were supposed to own, which is one of them, it's at whatever 555 now. That means I got a $55 stop, which is probably down around 500, which looks like right there. That looks like where the 10% stop was. So if I'm holding an abnormally large win, if I'm right here and I'm up 15%, and I've got skin of the dragon, PSAR flip, Bollinger Band mean, any one of those three is an easy, justifiable technical reason to exit. Why would I just let it come all the way back down to 10%? That looks like probably about 7%. That's probably 5%. That's probably 4%. And so that feels like a logical stop to preserve 2/3 of the win. Because if I'm up 15% and I want to keep 10, I want to keep 2/3 of that, then a 5% trailing stop would be appropriate. And that's probably right there at the PSAR, done in one. And then just elect to manage that position in BMR using the PSAR on the 3-day, and then just leave it alone.
Sounds good. One other thing you mentioned on Sunday was you were talking a little bit about some of your live trading shops or workshops where you had were having traders trade frog rules versus the robot and just see where everybody came out.
Yeah.
And I thought that was a great idea. Kurt and I were doing that, just kind of picking random days with random symbols and seeing how close we came out. But it was useful in that we could cram 5 days of market action into an hour if we wanted to and cover a
Yeah,
lot
it's
of.
really focused trade. Like, so on a day where the frog rule mechanically is supposed to earn 0.2 R, it was not unusual to see people trading with discretion, getting 1 or -1. And the frog mechanical rules were usually in the upper half of the range of human performance. Like, most of the time, the frog was just better than most people. And then there were maybe 20%, 30% max of traders who would come to that workshop who could routinely, with their own discretionary exits, consistently outperform the standard frog rule. So what that got me into the habit of doing was say, hey, if the frog mechanical entry says to enter right there, and if the entry is the least important thing, just go ahead, get in, and then always know if the price is here, no, that's where the frog exit is. And then I would never have my stop lower than the frog. But sometimes I could justify tightening it up here. And then if price kept going, then at some point the frog would be up in here and it would be higher than my stop. And then maybe I could either just reestablish the frog trailing stop or continue to march my stop higher, but never lower than the frog exit. And that's turned out to be a reasonable. Now, that has since become the same way that I use the PSAR dots as a way to track a reasonable set of exit rules that trades off being too close or being too far away. So I'm never lower than the PSAR. I'm never lower than the PSAR. But if I'm higher, it's because I have a reason. And then I just watch to see when the PSAR takes that one out, I have to at least resume the PSAR.
Got it. That was going to be my next question, actually. And do you have bots set up to trade SSCs and COTA2s and
I have
collapsing?
I have alerts. I mean, I look at all 30 of my symbols every day on a 3-day chart because it
Okay.
takes me literally 2 minutes.
And that's
I look at
pre-market
every.
thing?
What's that?
Pre-market thing on the 3-day view on things, or
Yeah, the night as soon as the market closes and I'm doing the daily reports,
okay.
I just go through that stack of symbols that you see on my trade statement. There's about 30 symbols or so. I just put it on 3-day and I look at each one for about 5 seconds and see, hey, what's up with that? Anything unusual happening? If it looks interesting on the 3-day, then I'll drill down to the 1-day or the 30-minute, something like that. It doesn't take long to do that. And in the same way, the 30-minute bar, I'm looking at those every day too, and it takes a couple, 2 or 3 minutes. So the total amount of time that it takes me to review those 30 symbols for 30-minute bars and 3-day bars is maybe 10 minutes, 20 minutes.
Okay,
It
good.
takes me that long to warm up to print the reports. It takes me longer to print the stupid reports and name it and make sure that that I haven't screwed anything up. It takes me longer to do printing of the reports than it does to review the symbols. And then I just take note of the ones that are interesting. And if it's interesting on the 30, I may go down, look at the 3 or look up at the day. But usually it's to drill down deeper. And anymore, the 3-day is plenty long enough that I can see what's happening on the 3-day. And my forward look on those is really only another 10 or 20 days. So the 9-day is almost too slow. I can look at the BMRs. So if I look at when I look at the BMR report and I want to see and there's new symbols in the top 10 or 20 or 30 that haven't been there for a while. Instead of looking at a monthly chart, I'll go look at the 9-day. And if it's interesting, I'll look at the 3-day. And then that's how that thing moves out of the BMR and into the 3-day, 9-day as a candidate.
Gotcha.
And then that just becomes a cheap and easy way to do long-term swing trading on relative strength leaders who are in a position that if nothing changes in the market, they could just keep drifting higher faster than the market for 1, 2, 3 more months. So why not just put a little extra saddlebag on him and have him carry the mail? That's all that is.
Okay, thanks. That's all I had for tonight. Aho for me.
Okay. Kevin or Jay?
Go ahead, Kevin.
Okay, I can go. So I'm just trying to kind of get out of the aftermath of the wedding, getting back into things. So based on last week's conversation, I decided I would focus on I was gonna do the 10-minute and the 3-minute.
Yeah.
And basically just focus on the 10-minute and then apply 3-minute for entries. And then I kind of wanted to open up my symbols a little bit to see whether I could increase my span of control, add something up. So,
Sure.
And we had gone through a list in the past. And so what I've been noticing, you saw it on my submission yesterday.
Yeah.
I coded the 3 and the 9 together.
Yeah.
So I don't know. Do you mind if I show that or?
Yeah, please do. I that's a good idea. I tried doing that on TC 2000. I couldn't. It gives you the 3-minute, 5-minute, or 10-minute. It doesn't give you a 9-minute option. And if I could have, I probably would have. But I like the 3x3 is pure.
Yeah.
And there's no overlap in when the third 3-minute bar closes, that's the 9-minute bar. You can see it very clearly like that. Now let me understand the indicators that are on there. I see the orange dragon. And is that a 10 bar SMA plus or minus a half based on 9-minute bars? Is that clear? Am I saying that right?
We can't hear you, Kevin.
Oop. Yeah. Are you muted? No. Hey, Jay, are you able to hear me?
I can hear you, sir.
Okay. All right. I had a hourglass waiting on mine. So, Kevin, can you hear me? Give me a thumbs up if you can hear me. Okay. So we're not hearing you. My question was, is this orange dragon, is that on a 9-minute bar?
Yes.
Okay, we got you. And then this purple one, I'm assuming is the dragon on the 3-minute bar, correct?
Correct.
Okay, got it.
And then
I really
purple
like that. I really like that.
is, am I coming through now?
Yep, gotcha.
Can you, okay. So basically the magenta stuff. So that piece, that's the 3-minute piece are there.
Yeah.
The purple dots. And then the purple dotted line there is
Yeah.
just reminds me that that's the 3-minute Bollinger Band mean.
Okay.
Which is why I flipped to the 9-minute, because
The
fractally that
the
equals
3-minute Bollinger.
band mean is the
Oh, that's the spine of the dragon. That's the spine
that's the
of the
spine of the
slow
dragon.
Yeah, and
For
then
the
this
9-minute.
this one is the 9-minute RL10, correct?
Yes. And then this is the 3-minute RL10.
And that's the 3-minute RL10. Yeah. So
with the
this is
dragon.
almost if
Sorry,
this was
baby
a,
dragon.
yeah, if this was a 10-minute chart, then that would be the R10 and the R30. But in this case, it's like the RL27.
Yes.
But it's the same difference. So
Yeah. It's an
Right.
RL27.
Yeah.
Yeah. And then I'm applying, I've got this is the top one is a 3-minute MACD.
Yeah.
And then the bottom one is roughly.
Now, what's interesting is notice how closely the turning point up here was to the turning point of the faster dragon. Here it's a
Right.
little bit. Here it lags a little bit. So there's some information content in there that's worthwhile. But it does a pretty clear job of telling you where your upper limits are, the upper limits of the channel.
Yep.
There's an upper
Yeah,
limit. There's an upper limit, and now you got a kata 2. That makes this one a great kata 2 because you have this, and it's broken through both dragons, which were in agreement that that was fair value, and now it's free and clear, and then it halts right where you would expect it to. And this is a great exit as you're trusting that shorter PSAR. I mean, that's
yeah.
just
By then
that's
I've
just
yeah.
clean.
By then I'm pretty confident that it's gonna.
Yeah.
That the 9-minute is gonna roll over also.
Yeah, and you got a double top on it too. You have this top
yeah.
and then this top. So you got
Yeah.
the fast one, the 3-minute, and then the 9-minute. Everything's rolling over here. The dragon's rolling over. That's really strong resistance. Well, it was strong resistance here too. So that's pretty. You gave it as long as you could, but still preserved a good move. So I love that. And then this one on the downside is even cleaner.
Yeah.
All of those.
Yeah, basically that by then everything is falling. You know, I can throw the 30-minute on dragon on here also, which I do. For some reason, I just looked, it's not on there right now, but I normally would have the 30-minute. I could just click on and off.
Yeah.
The interaction of the dragons has been really good. Like when I got chopped, the dragons are on top of each other during the choppy season, right? And then if I get the 3 dragon outside,
you start getting
if
this.
the RLs are on top, it's
you get this
fabulous.
little zone of separation right in there. And then when that whole thing rolls over, you see how it comes right to the pinch, and there's your 27 or your 30 meeting the 10. The 10 does this and has 1, 2, 3 legs up, and then it's done. So that just feels like this. 3 legs to get up there. And then here's the 30 makes the turn. And then everything just comes right to that pinch. So when this thing crosses over, that's the time period of outperformance. And now it's starting to diminish. Done. And now that's the question mark right here. What's it going to do? Is it going to revert back down to the VWAP and then another leg down? Or does it grind forward? So that's sort of the that little pinching action. That pinching action, the convergence of all roads. Everything is coming together right there to exit the train and start a new one. Yeah. In the same way that you got
if the 3-minute in a 3-minute makes it through, I'm always out.
Yep.
Like this happens a fair bit actually when a 3-minute dragon, they kind of come together and then it can break out again. But unless it's at a good angle, like divergence, it's generally so. There's
Yeah.
been a lot. Like it's I've been watching it.
Yeah.
Sorry,
Before
Andrew,
you shift that, just watch look how good that orange dragon is. You know, from checkpoint to checkpoint.
yeah.
Would you get the same information from a 3 simple moving average and a 9 simple moving average?
No, they are noisier and slower to turn.
Well, then could you do a 3 least squares moving average and a 9?
The baby dragon is pretty close to a 3 least squares, that little one right there. And that's actually kind of noisy.
I've
Okay.
been just playing around with the baby dragon,
Yeah. And what
and I'm
my
not sure
brother
whether to
does,
apply it to the
what
3
my
or to the
brother
9.
does is, let's say if he gets an entry around here and the RL10 is running up nicely, so you get a nice run up in the RL10. He puts a 3 simple moving average on that. And as long as that thing is going up, the baby dragon or the simple 3 is always lagging. And then that comes to a pinch.
Would it be
Usually
better
like
to apply the baby dragon on the longer time frame?
you know, you probably already have that with the you know, the PSAR is already pretty close to that, to be honest.
Yeah,
I mean, you can play, you can have
that's where
too
it
many
lands
lines on
up.
this one too, you know. It's just that
Well,
like on this one right here, you got this amazing run up, and the orange dragon is just right here, and the faster dragon is only right here, so you still got all of this naked space. You know, a 3
Mhm.
simple moving average on this line probably puts you right there, is my guess. You can it's possible to have too many
Well, see, that's
lines down there.
I'm the reason why I tried to put it. I mean, before I just had the dragon on of the
Yeah.
9, and then I'm like, wow, what happens if I see? And I kept flicking on and off the
Yeah, so
RL
this is the baby
theory.
dragon that you have right here.
Just, but I've just from
And
my
that's
own. Yeah, I just moved it to the 9 minute, and it
Yeah.
maybe is a little more informative because the challenge is, do I apply? Do I take a signal from the 3 or do I take a signal from the 9? So you're kind of that's where I've been
Yeah.
watching this interaction between the dragons, and if they're close together, I'm gonna take the 3, and if there's divergence, I'm taking
Yeah.
the 9. Does that make
Yeah.
sense? Like
Yeah.
that's kind of where I've been
Yeah.
playing.
What I like on this one is you got this clear top, which was the end of this long grind. You had like 4 legs, and the pullbacks were getting larger and larger. So that was traders leaving the trade. Each one of these little pullbacks, 1, 2, 3, and 4, each pullback was a little deeper and a little faster. And then it terminated right here at the peak. And then there was a big gap down, and then a morning hook, and then a runaway move back to the top, refreshed. They went and snatched up all the trailing stops. Panic resumed, so they got a lot of inventory. And now this thing is running away, and it has cleared the previous top. So this is all, that's the next leg up. How far could it go? So it's already moved 2 or 3 bars past that. So when I come and look right here at the peak, you know, this is 1, 2, 3 bars of goodness. All of that is above this resistance. And that's probably right about where this big move here rolled over and collapsed in one big magic move. One, one leg, pause, two legs. And then it took grind, 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 grind. And now it's fought its way all the way back to here. And then they gapped it down, sold off, and then resumed. And the fact that it's above this price level says this thing has a chance for some real legs. So now what I got to do is go all the way back off the chart to see where was the next highest turning point from the previous upward trend.
Right,
To
right,
see,
right. Yeah.
to see where the next, measured resistance level is.
Would you go to the 30-minute for that or stick on the 9?
I would just expand that thing out, and I like the way that orange dragon looks.
Like
Yeah,
if
right
I
there, yeah.
go,
Yeah, done.
if I
Right
back
there.
this off, yeah.
Yeah, we're right at a really interesting price level now.
So,
Yeah, pull it out one more time if you could.
yeah. I
Yeah,
mean,
zoom
I
out.
guess this is the last
Yeah,
footage
so
today.
yeah, just stop right there. Yeah. So this double top, that's key. I'd probably say this one. You had a long period of time with a VWAP right there. There's a bunch of guys in.
Mhm.
And then you had a slow slide, big slide. Now here's your grinding move. A nice little run up. Now this pullback, if it holds here, you got leg 1, leg 2, leg 3. And it's not till it gets above this one that you're really got an all-star trade. That's supposed
Yeah,
to be
I was kind of hoping for that today in this region
Yeah.
here.
Yeah.
I took it,
Yeah.
but didn't go.
Yeah.
So I'm okay. From me,
Yeah, I think the setups you have, I think you got enough indicators on there to give you a slow, medium, and fast relationship.
that's enough. I shouldn't need the 30.
Yeah,
Because
yeah, and
what
I
I'm
think
trying
you
to
got
do is
enough
to
turning
say,
points. Yeah.
because I can study one chart and I know what's on this chart now. Like I've stared at it.
Yeah.
I'm not confused. And when
Yeah.
you back out, it becomes, so I don't do that anymore. I just flip to something bigger, right? But
Yeah.
so I'm just the interactions in my mind are how to flick between the 3 and the 9. I really like the amount of information I get out of the 3, but I got to train myself not to always follow it. So that's part of one of the things that I'm working on with this. But
Yeah, if you have like the 3, 9, and the 30, if I can say it that way, you always have the fast mover.
so because like I turned the one that's the 1-minute dragon, right? Like it's too much information.
And then the slow movers or the medium mover is going to look like this. And then the 30 is going to always kind of look like. So when this one turns, that's what gets you into the SSC in this region.
Yeah, and it's been really successful.
By this time, you're probably through the dragon, and it's easier to see that trade. This gives you a confirmation that it's working, and then when this one turns, you got some, you got some goodness going. And now when this turns, your first target is down to here, and if you exit here, it protects it against a move down to here. So I always like this exit and that entry. That one looks to me like the sweet spot. And then I use like this move here. Okay, it's now confirmed that I'm not going to lose any money. And then this is the sign that it really has tipped over into the buyers. And then I'm always shift. Once I'm in the money, I'm always watching the fastest mover to flatten out and start to roll over. And then the soonest exit I can take is a 1, 2, 3. Or a dragon horns. You know, I get a big dragon horn movement like that. It opened, it ran up, and it closed down here. So that could get me out in 2 bars. And if I can, yeah, I have a chart later to show later. I can about using the multiple time frames. I was looking at the
Okay.
difference between the 3-minute and the 10-minute. If you let me just pull that up real sec for a quick
Sure.
sec. I think it was in NVIDIA today.
Mhm.
Looking for, yeah, right here. Yeah, so this is NVIDIA on a 10-minute on the big chart. Oops. Annotation. Yeah, so this is NVIDIA on 10-minute chart. And here's yesterday's close. Here's the OR10. So I'm entering in the second 10-minute bar. That's the R5 in NVIDIA. So it's 2 R10 boxes. And then it moves up nicely. It gives me 3 bars of really good movement. And then it opens here and then it starts to fail. So at that point, I drop down here to the 3-minute. This is an extract of the 3-minute chart. And that yellow dot was peak trade performance there. So that bar, let me make it easier to see. So now I want to get down on the 3-minute. You know, I've noticed I got these higher lows, which is what I love. But then it gets this, and this thing is starting to roll over. It's already a 1, 2. It took out the little doji bars low. I'm already hating this trade. And the skin of the dragon, so if I jump stop that, is right here, which gets me out at 133 and a quarter. 0.25. And if I take the 1, 2, 3 exit, which is where the PSAR -1 hits, it gets me out at 132.75. So that's where these 2 red dots are on the 3-minute bar. And those are clear markers on the 3-minute. You know, it's the peak of it's the top skin of the dragon. It's the bottom skin of the dragon. Well, when I go up to the 10-minute chart, all of that is happening inside this big red candle, which opened here, could not make a new high, and now is starting to decay. Now, if I take this bar
I got some mail that you're never going to look at, but I'm just going to give it to you anyways.
and say, let me keep half,
I'm on chapter 11, and it's my second day reading it, and there's 32 chapters. I will.
that's the upper limit on the 10-minute dragon, or 3-minute dragon, excuse me. And that's where the lower limit of the dragon on the 3-minute was, like right here. So on the 3 minute, those are two very clear mechanical, technical, precise price points where a very specific exit rule could get me out. If I'm just on the 10-minute bar, I got to eyeball that. Or I got to take the previous bar and just say, I want to arbitrarily, I want to keep half of it. Or I want to get out at I want to get out at the 1 bar low, I suppose would get me out. This 1 bar low gets me out right here. Half of that bar gets me out here. So the way you've got your indicators marked up on the 3-minute chart, but showing the 9-minute indicators on there too, I think allows you to see both of those on a single chart. I'm personally content with saying on a 10-minute bar, after 3 bars in my favor, and I'm better than a 1R win, that also preserves 1R. So that's kind of a no-brainer. So this one, to me, that one is the nice exit because it preserves 1R. It's at the peak of the dragon on the 3-minute. You know,
Yep.
I know how to re-enter. And on a 10-minute bar, this was sort of just an orderly decay. And right around in here, when it breaks through the intraday VWAP, which by the way is time frame agnostic, which is what I like. You could make an argument for either one of those being a good short. I think this one's better because it closed below. And you could even argue if you had to, this one started dropping down and it's 100% of it is below the VWAP. And I was slow and I just got the PSAR entry. So you might have been even able to.
This one shows
optimize.
up as that's a cotta 2 on the short.
Yeah.
On the
Yeah.
3-minute. Right
Yeah,
there.
on a 3-minute, that's a pretty clear cotta 2.
Yeah.
That's also where you'll notice that the summer of MACD turns to fall of MACD. And now it's fall in blue. From here all the way to here. And this was kind of key. Watch what, and Jay will like this one, where that 30 period Bollinger Band, the middle of the river, when that breaks, that next bar is decisive. That one that move right there makes that look like a genius entry.
I mean, I don't have your trained eye, but I tend to recognize the dragon horns all the time.
Yeah.
Like it's right there below there, and
Yeah,
up
I
the
think,
top.
yeah, like this one up here. Yeah, for sure.
Yeah. And
this
because
one
I'm
for sure.
dyslexic, I see that one too.
Yeah, well, that's right where the 3-day anchored VWAP was.
3-day measured from where?
It's the 3 previous days. That's a rolling 3-day VWAP.
Okay.
So when this first started, it takes essentially the last 2 days plus the open day. So it's this partial day plus the previous 2 full. And so this is the orange one. This orange one right here is today's VWAP only.
Right.
And then this one, today's little upward move yanked. This is where the 3-day closed yesterday. So it's slowly dragging that thing up. So when this thing drags it as far as it can and then starts to decay, coming back to here is not irrational. And in fact, the distance from here to here is probably the distance from here to there. The stretch above the Bollinger Band main, the stretch below the Bollinger Band main. It's kind of uncanny. And when this whole thing turned, when this thing held above that, that's sort of where the alert entry, standard risk. And then it didn't follow through much. And that's sort of typical of later in the day. You know, here's your intraday VWAP. Here's your Bollinger Band mean, the 30 period. Here's that RL10. Well, if you're going to go, you're supposed to go. Oops. Done. And just capture that little piece. That's how I look at that. All right, that's everything I wanted to show on that one. Any other questions on that one?
Oh,
It
So,
always looks
if-
clear after the fact.
What's that? Well,
it's no, it's great. So from as far as this chart is concerned, I'm going to keep playing with that. Try to focus on it and then just add symbols instead of trying to do multiple different charts. So are you okay, like on my nightly,
oh, sure.
my
Yeah,
submission, I can just use
Yeah.
this?
yeah,
I mean,
they're your charts. I know how to read them.
Yeah. Okay, good. Because I'd like to focus that way and see whether you have any insights that come out of it, you know, and then,
Yep.
like, I just don't want to confuse everybody, but I guess it's the way I want to trade right now. So,
Those charts are for you to place your work on your workspace. And this is like us walking around the workshop to the different stations where guys are working, and you have your little like show and tell, you know, displaying your work in your cubicle or your cubbyhole.
yep. Okay. Well, and this helps because now you understand what I'm doing, or
Yeah,
like
yeah.
you
Yeah,
can
I
be
was
clear
pretty
over
sure.
what
I
the
was pretty
indicators
sure.
mean.
Yeah, I just wanted
Yeah.
to confirm the.
Yeah. And I'm trying to actively get rid of everything I don't need. So
Yeah.
that's something.
Well,
that
you
I'm
I
working
know
on.
you got rid of the river. So in some
Yeah.
ways, like on a 3-minute chart, the dragon the dragon and the river is the slow and is the fast and the slow.
Right.
So you'll notice that on really good moves, the dragon comes out of the river. And then when he can't, he comes back to the river to drink.
Yeah.
And price has to fight its way back through the dragon to get to the river. So that's why sometimes you'll see 2 or 3 legs up.
Okay. All right. Well, it's good for me for today.
Okay.
I'll say hope.
Already, Jay?
Thanks, Ken.
You know, my situation is a little bit different because my docs are set up that I only trade the broad base indices. So, I mean, I understand taking a look at a
Yep.
3-day look back, 9-day look back, and looking for RL10 critical turning points, but you look back 9 days on the S&P, and I mean, it looks like someone took about 600 Cialis, you know, things just going straight up.
That's like 9 years.
Yeah. So it's not, there really are no turning points. You know what
Right.
I mean? It's
Yeah.
literally like just a one giant kata 2 straight up, you know?
Yeah, there's no clear way. Yeah, there's no on the dailies and the 3 days and the 9, whatever. There's no like real clear. Oh, that was a turning point, and now there's a new regime. No, this is just
Yeah.
they hit the afterburners, and it is just going.
And today there were 2 there were really two right off the bat. Dragon horn trades, like right off the bat. Early on, like an OR3 trade, maybe it'd been OR10, but you had the dragon horns, and then it didn't move for like $3, and then it was below the dragon, and then there were dragon horns below that too. The RL10 turned down, and that was basically it. So I made some trades today I should not have. I erased a great day of work yesterday. Today, again, trading very small, but that's basically it. So
Yeah, today was a really tight range, sideways, almost a breathing day. Just
yeah.
yeah,
And
I'm
the
looking at
premiums,
maybe a dollar or and $10 on the SPX. Pretty tight channel all
it was a
morning.
very very tight channel, and the premiums for tomorrow, you know, the 5600 call for tomorrow was like $2, and the 5560 was like 3. So I mean, you're like $20+ out of the money, and on a 1% move tomorrow, up or down, one of those is going to $40 and the other one's going to 30. So you can't sell that. That's just stupid.
Right.
Yeah. So you just have to do nothing. So we'll see.
Yeah, I'm looking at the daily. That VWAP was horizontal the whole day,
Yeah.
and it was a very tight oscillation on both sides of it,
Yeah.
and nothing.
So Jay, why wouldn't you buy that then if you can't sell it and you're going to get that big of a move out of $1 premium?
Well, the problem is you don't know when you're going to get that 1% move. I mean, right now you could say, well, the VIX is working because we're in such a tight range. It's at 12, and you don't know. If I had a crystal ball, well, that would answer it. But the odds of you buying that tomorrow and getting that are pretty low. But you can't sell that in size and frankly be responsible. I've got too much responsibility. I can't do that to my clients. I mean, you're selling premium, always it has some risk to it, but you can't collect 30,000 to lose 400. That's not a good return. I'm okay collecting 50 to 75 or $80,000 on a position that I can let the market settle down a little bit and get out of it. But here, once you have that kind of a loss, you sell that 200 or 300 times, and you've got some real problems on your hands. In particular, I mean, I think we're approaching like 600 days without a 2% down day in the S&P. I mean, it's unbelievable.
Yeah.
And that's just that's why I'm trying to learn these directional trades. I'd like nothing's going to work 100% of the time, but I like the OR3 trade. I've caught that several times and made a little bit of money. But yeah, so that's kind of what I'm trying to figure. What I'm really focusing on, really.
In the S&P, it's almost as if, the Fed is printing money as fast as they can. The banks are vacuuming it up and dumping it into the only place they can store that much money, which is the largest big names in the tech sector in the S&P, or the giant banks. And because there's no other place you can just park that money
No.
and the rest of the world is not in a position to take on leadership because there's so much instability. The Taiwan question in Asia and the Ukraine situation in Europe just says those two regions are paralyzed by politics and war.
Well,
And the US is, we got two octogenarians that have both lost their mind with a coin flip. And you say, all you can do it. Well, I got to put this money somewhere for the next 2 to 4 months. It's the S&P 50, the S&P 100 are just crushing everything else. Because there's no other place to put the money in. I think that's what's happening.
Well, there's definitely no fear. I mean, with the vol in the 12s,
Yeah.
that's pretty rare territory. And then, another thing that some other traders pointed out to me, um, it's a felony if you're in political office and you know that that the commander in chief is not fit, mentally able,
Right.
right?
Right.
And there's certainly no crime with getting old, but I mean, the thing that's got me a little concerned, I've seen two very large firms this year that and when you manage other people's money, and I'm managing a lot of money, you feel pressure to keep performing. The hardest thing to do as a trader is to say, listen, cash is a position too, and we're doing box spreads just to make a little bit of money. We're not losing money, but we're being patient here.
Yeah.
But I've seen two very large funds, one with 50 million, the other with half a billion, take 50+% losses
Oof.
this year within the last month and a half, because they were convinced that the market was going down, and they get killed in like a matter of days. The one guy had bought, I think, 80 some thousand put spreads, and
Yeah.
within like 3 days they've gone like 100 and something bucks against him. And so you're thinking, okay, this will settle down a little bit. Well, it hadn't settled down; it just keeps going up. Um, and that's a little concerning.
Yeah.
So,
The guys at the compound, I like Josh Brown and Michael Mitnick. They do their. They were discussing some of the uncomfortable positions of good long-term professional analysts who've been good at judging market peaks and valleys and all that, who have to follow the numbers and say, hey, we can't in good conscience be without fear here, even though the VIX ain't showing. They get fired because they're lagging behind a market that's not listening to the pros.
well, and that's just it. I mean, the market doesn't read the charts, right? And part of it is the way the index is constructed with the weightings on these 7 companies. Until they start to fall, it's not going anywhere.
Yeah.
So buy the dip. That's the
Yeah, I
mentality.
mean, one of the ways to just kind of monitor that, if you plot the OEX,
Yep.
the S&P against the RSP, which is the equally weighted S&P 500, that really gives you the exaggerated difference between the equally weighted in RSP and the top heavy OEX, and see that, oh yeah, money is really just magnetized and going to the top.
And another argument people bring up is that there's still a lot of good value since it's so few stocks leading the market. But I've seen markets like this where when the 7 leaders fall, the stuff that's a good value becomes a lot more of a good
Yeah.
value. It goes down right along with it, at least at first.
Well, if you look at the S&P 100 today, the bottom 5 performers, the worst one of that is up 8% year over year. So when your absolute worst performer, the guy that's way out of the race, is up 8%, it just tells you how crazy the entire index is. That's
So,
part of that.
I mean, that's all I got. I'm grateful to be here. I'm seeing some of the patterns. I just got to get better at recognizing the smaller nuances
Yeah.
that you have ingrained in yourself. So I think it's unrealistic for me to think that I can duplicate what you're doing after just being here for 4 or 5 months, even though I've been trading for almost 20 years.
Yeah, I mean, I've been looking at this layout of charts for almost 20 years every day. for 4 hours a day. So that's 800,000 hours a day or a year.
Yeah.
That's 20,000 hours.
Yeah, and I print off the charts. I print off a lot of charts every day. I make notes on it, and I've got a fairly stout memory, in burning this into my head. So I do see a tremendous amount of potential with honestly catching
Yep.
$3 and $4 moves with a 70 delta option. That's all you need.
Cool. All right, fellas, I'm gonna get this processed and posted in the usual spot, and I'm gonna reload that prompt document because I actually think I added another section at the end of that was pretty cool. It was it's a prompt where you teach it how to ask good questions, and then it says, then you say, all right, I want to write about this topic, and then it asks you questions, updates the prompt. You answer those questions that it asks you, and then and so it runs about 7 or 8 iterations, and it just is like leading you to write good prompts. So you don't even have to know. You just have to answer the questions it asks, and it puts the AI in the driver's seat on that. It's starting to get terrifying. Had a guy walk into my office this morning and say, because I've been sending little snippets of those prompt things around the department, and he said, "Hey, you really need to write a book on that." I said, "Just so happen to have."
All right, guys.
I gotta
Have a good
be
one.
careful there at work because they're still kind of locked into the military industrial complex, and if guys get outside of that little ecosystem, they start getting, "What are you doing talking to other people that aren't wearing uniforms?" Well, got to stay in front of all this stuff. The funny thing is that the mindset of good tactical traders is almost identical to the mindset of good tactical warfighters, guys that are really good at feeling individual and squad level tactics, where you're kind of reacting as an organism to the environment without trying to overthink, or you're really going by feel. The mindset between the two populations is almost identical. And so part of my justification for working in this area has always been, I'm trying to understand that kind of executive decision-making under stress and under uncertainty with, when there's a lot of consequences. See, what is it that works for traders that allow them to stay in the game and to continue to be good all the way through? And it turns out to be the same thing that allows battlefield commanders to endure, the continuous grind of combat. Yeah, I think, and I was in combat in Panama back in '89, running a command post, and I don't think I slept for 4 days. I was running the battalion command post, monitoring 5 or 6 different nets and moving a couple thousand guys around on the battlefield all over Panama City. I don't think I ever saw. I was sleeping in the chair listening to the sound of guys talking, and I would wake up when I heard something that needed me to wake up. It was surreal. Anyway, we will catch you guys soon. Keep the faith, keep marching, and we'll catch you
Thanks,
tomorrow.
guys.
Thank you.
Yeah, thanks.
Ciao for now.
See ya.
See ya.